Hey, welcome to the Closing Beat, everybody. Happy Monday to you. How's it going out there? Everybody doing good? What a day. What a day we've had here so far. Just so much going on. You got strikes, you got the Fed stuff going on. I guess you probably heard about the jet. We can find anything on the planet, but we're missing a jet for some reason. It'll turn up, I'm sure. You got a bear loose in Magic Kingdom. Cody, did you hear about that? There's a bear loose in Magic Kingdom. They had to shut down half of it. He's just chilling in a tree, right? And so they're like, uh-oh. He's by Big Thunder Mountain trying to go on the ride, I guess. They had to shut it down. They're trying to find him so they can get rid of him.
Whoa.
Just a bear.
Wow.
Yeah, it's not a Halloween joke either. It's a genuine bear just sitting in the tree. Someone was like, that's a bear. And then it's national news.
That's crazy. No, I've been busy tracking the F-35, so.
Did they find it?
No, I don't think so.
Well, some good news, right? We got a winner. Guess the Dow, right?
We do. Yeah, we have a winner for this week. Your winner is Jeffrey W., and he is a client, so he's going to take the $100 account credit with his guess of a $34,611, by the way. That was his winning guess. So good for Jeffrey. First client we've had win in a little bit, so Jazz Wealth clients representing. We love to see that.
Did he pick the Roth by chance?
We're not sure yet.
If you win Guess the Dow and you're a client of Jazz Wealth, I can't tell you. I can tell you if you ask, I guess, but I mean, I'm telling you now. Choose the Roth IRA, right? Of course, we want the money to go there. Don't get taxed on that one there. So we can credit it to any of your accounts, but congratulations, Jeffrey W. And is this the leaderboard that we have here?
I don't believe so. I believe that is outdated. We just usually on Mondays we just focus around the winner and the positivity.
Well, let's celebrate that. Yeah, we'll celebrate the winner. Okay, cool. Well, anyways, welcome to the show, everybody. We call it the Closing Beat. Because we're like the only advisors that talk about the stock market in more meaningful ways than just a copy and paste from what they get from other services there. While other advisors are playing checkers, we are playing chess. And I'll share one reason why. We had a client ask about IPO pricing and said that ARM, I saw it. It looked good, man. I said, well, let's take a look at some of the data there. So if you look, IPO changes the day one, right? Like when they launch. If they price above the range, the median performance is to have an increase on day one. Median performance 38%. That would rank you in the upper range there. So when you see that they say we're pricing in the low end of the range, pricing in the range, or above the range, when they price above the range, you tend to see a more meaningful pop. The reason we play checker or chess instead of checkers there is what happens after that? Should you be buying IPOs that have such a strong move there? So we're able to share that with the client to help them out and make sure they didn't make a silly decision. I guess I gave away the answer there. All right, let's take a look at the stock market here as we go. Here's the S&P on the screen here. A little bit wild to end the week, actually. Got a bit of a down day there on Friday. We fell 1.2%. NASDAQ was down 1.6%. VIX, if you follow the VIX, was up 8% on the day. It was also triple witching, which if you're familiar with that, that's basically when stock index options as well as futures options and stock options, the triple, expire all on the same day. There is quadruple witching as well. Triple witching happens, we'll do it one more time. So we get September, December, then March, and June. So those are the 4 times a year that happens, and it is actually pretty common to see a little bit more volatility there during that as people adjust and, more volume makes its way into the market in various forms, usually in the form of cash. If you look at the S&P here, I want to point something out. I'll go here. All right. There we go. So all rallies lost steam, right? When the futures market opened, we were positive, then negative, then just positive, then negative, then positive. We bleeded lower throughout the night. This is overnight, right? Fall apart here into about 4 or 5 o'clock in the morning. Get a big rally here today when the volume was a little bit lower. The market opens up. Everybody gets to action there. The European markets start to close right in here. And we see a sell-off into the rest of the day. So no matter what happened today where the market tried to get something going, it was just pushed back down, pushed back down. Now, I won't pick on that so much for like a technical analysis thing here. More so pick on it for the Fed meeting, right? So we got the Fed coming up here, and that is just going to steal all the attention, right? It starts tomorrow. The announcement is on Wednesday, or the press conference is on Wednesday. Basically, they're going to leave rates unchanged. We'll talk about that in a second. Sector-wise, if we're looking at the S&P here, okay, just going to type it right. If you look at tech, actually, let's do it this way. Here is the year-to-date performance versus the month-to-date. And I hope you can see it, the tickers in there. I put all the tickers in there. These are the sectors. And so what you're looking at is if you follow the x-axis, the further you go this way, the better the year-to-date gain. So, for example, tech, consumer discretionary, and communication services have had the best year-to-date performance. If you follow the y-axis, as you go up, this is the best month-to-date performance, and then, of course, the worst month-to-date performance. As a whole, the better your year-to-date performance, the worse your performance has been so far this month. The worse your year-to-date performance, the better your performance has been this month. In other words, money coming out of that, I don't know about this sort of aggressive stuff. Maybe I want to put it in utilities and real estate and maybe some financials and energy, more particularly energy there. And so that's kind of the change that's going on this month. I occasionally like to look at this just to break things down a little bit further to see what's going on. As far as stocks around there, most notably today, the Tesla is probably one of the ones that got a little bit more attention. You didn't have any action from the big seven. Right? So it was very hard for the market to sustain itself in any kind of rally. You could watch them all day. As soon as those started selling off, the market got a little weaker, and then they'd bounce, and then they'd do a little bounce. Tesla down here, we're getting sucked into the strike issues. So if you look around, you got Ford. Of course, the strike is still going on. General Motors, Stellantis, which is an ADR, down a little bit on the day. The strike continues there. The White House maybe has a team that's going to get involved. I don't have anything new there for you, but the strike continues. And remember, every week that the strike continues, it's estimated that about 0.1% of GDP is being sucked out of the market. So you put those pieces together with the strikes going on, not just in the auto workers, by the way. Strikes going on, maybe a government shutdown coming down there. You start working your way up to 0.5% of GDP that gets pulled out of the quarterly numbers. That'll be something that gets a little bit more discussion at the end of the quarter, more particularly at the end of the fourth quarter when we see exactly what happens there. Hopefully, we can all just get along and figure something out, and it'll all be good. Anyways, the excitement doesn't end there. You've got the Fed meeting. There's a lot of interesting stats wrapped around the Fed meetings there. Of course, that starts tomorrow. We'll get the press conference on Wednesday, as I said. No one is expecting a change in rates there. That means that we're focused on the words. What's the probability that there's a rate hike at the end of the year? What's the probability that they consider cutting rates, which I'm sure they're going to say it's too soon to decide. But what are we doing about rates in 2024? We're starting to look forward towards that. And then, of course, the projection about how that may cause a hard or soft landing there. Fun little observation. The average one-day gain for the S&P is how much? Actually, since 1994. So I'm going to compare the Fed to the S&P, and the Fed started making their announcements and really speaking a lot in 1994. So that's the data that we use there. The average gain for the S&P, 0.03% average daily gain. So in other words, it's a slight positive skew to the market. And you know that. That's probably not new news to you. The average Fed day gain, meaning the performance on that Wednesday, right, when they make their announcement there since 1994, 0.27%. It doesn't sound like a lot, but that's an outperforming day. All right, so that's considered to be, now that's an average, 0.27%, but it's considered to be a more volatile day, right? So you can look a little deeper into that. With those types of returns, if you had only invested on Fed days, you just woke up on that Wednesday and you said, buy now and I'll sell at the close, you'd be up 80% since 1994. That's a lot, but it's not a lot compared to what the market did. It's about 10% of what the market did. So in other words, from 1994 until now, basically the last Fed announcement, about 10% of the market's gains came on just that one day. Granted, there's been hundreds of them, but just on that one day. So it's pretty cool. That's why we put so much emphasis on this kind of day and why it's so important there. Now, you know, I don't like headline kind of stuff here. So let's look a little bit deeper. If we look by month, Is there a particular month that the Fed makes their decision and it just happens to be a better performing day? So here's the average change on the Fed day inside of the month that it happens. The bad news is September, which is historically weak anyways, is also dragged down by that. So there's not going to be, you notice how from the September stats that we share, there's not some spike right there at the, middle to end of September from a Fed day. It doesn't normally happen. It certainly could happen. It just has not happened on average. Your best Fed days happen in April and in August. Unfortunately, we just passed that. And we did not have one. So this is the breakdown of how that goes, February being the worst, if you're curious there. I'd also throw in there Jerome Powell. I don't know if he's a nice guy or not. I'm not going to badmouth him, but he has had the worst Fed day performance of any Fed member going back to 1994. His average performance on Fed day is 0.12%. That ranks as the worst. It still outperforms the market, but it ranks as the worst. Ben Bernanke, if you liked him, loved him, hated him, I don't know. He was the best at 0.55%. I'm going to guess it had something to do with what was going on at the time, but if you're just using the numbers, that is what you have. All right, you won't find it as a ticker symbol here yet, but CART is going public. That would be Instacart. The IPO market is waking up. That's why That's why I start discussing that little by little and a little bit more each day, because that's getting more and more interesting. That should be going live tomorrow, I believe. Tomorrow's Tuesday. That should do the trick. Other stocks in the news, Clorox. Uncharacteristically volatile here. You go, well, what's happening? Man, somebody hacked Clorox. How do you hack Clorox, man? I get like MGM, maybe they were after some money or something, or somebody made somebody mad, but Clorox, come on, man, they're just doing their thing. Anyways, that's why the stock is down there. They gave a little bit more clarity as to why they said it will have a material impact on our earnings, and that's because the way they were hacked caused them to have to go back to manually ordering supplies to build their products, manually shipping their products, once they're complete, out the door. And they were like, man, we need these computers. So that's been a little bit tough. They've rectified everything. They said they've gotten everything taken care of, but it's going to take some time for them to get fired back up into full and automated, or what was automated, production. That's unfortunate. Valero, they said, you know what? Things are good here. It's getting better. Everything's great. We don't need to invest in new projects because the U.S. Government at the moment says, we're not into that. We want you to do other stuff. So since they don't need to invest, they've got a little extra cash. They said, we're going to take $2.5 billion and just buy back our stock. That's about 5% of the company that they're just going to buy back because there's no sense in them investing in any future projects. A little disappointing. Steel Dynamics here in the news. They just gave a heads up. I didn't catch where this came from, but they gave a heads up that their earnings are likely not going to be as good as everybody's projecting. And we're just throwing it out there. And, maybe this helps you understand that things aren't going to be as good. Please don't have as high as expectation for us. They did do that. AutoZone, they will be really the only ones reporting earnings tomorrow. If you're interested in earnings, they are down 5 of the last 8 earnings reports there. They had 2 in a row. Let's see. So here's one right in here. Nope, sorry. Where's that? There you go. So there's your down move there. Here's your next one right in here when they reported earnings. You can see it's just not a exciting one necessarily to feel like it's going to pop. Of course, this time could be different, but they report earnings tomorrow. 85% chance that they beat on earnings, 53% chance on overall sales. Last week, we did an open house, Wine and Wealth. So you ever wondered what it's like on Thursdays with our clients? Me and Eric actually did an open house, Wine and Wealth, that you're free to check out. It is on the old YouTube and, of course, in the dojo for clients if you would like to watch it. Hope you'll check that out. All right, let's see if you have any questions here. I will get configured and just sort of distracted by that bear thing. I don't know if that's more interesting than losing an airplane, or I don't know. We'll see. Anyways. All right, questions here. We have Alibaba. Is Alibaba ever going to do anything? Yeah. I don't know. They're making big investments out there. That's kind of been their focus. Not seeing a whole lot in terms of why you should have that stock here in the short term. I'm just a little biased there. I don't like stuff that's moving sideways. That stuff, it's like, You know what I mean? Gets a little bit odd there. But Financial Wisdom, you like some Chinese stocks. You like those in there, do you? Got a ticker that's outdated. Maybe that was CART. So the ticker symbol for Instacart is going to be CART, which is fine, but it doesn't actually hasn't actually transferred yet, and obviously it's not trading, so that will be the case. Just like ARM, when you look up ARM, see how there wasn't much, right? Before that, you would have saw nothing there. This is, of course, the first day, second day, and here is today with another little loss there. Opinion on chips. Dustin been selling puts on AMD. Strike price 95. Okay. Well, you like the idea of scooping it up right around the 200-day there. And at the moment, there hasn't been any challenge. I didn't catch the expiration date there, so I don't know how far in the future you are. But I think that would be a very nice gift if that could happen. Very calm pullback, very much a profit-taking pullback, only a little bit more aggressive than the industry as a whole. So nothing like you would freak out about or anything, but I kind of like that. And if you're at 95, if you've been selling puts at 95, you're collecting an average cost that's naturally below that and below the 200-day moving average. So if you're a technical person, I get you. I see what you're doing. Pandemonium says, I'd like to know what that mishap was that caused an ejection while the plane is on autopilot. Yeah. And I was curious, like, why doesn't the plane, if you eject from the plane, shouldn't the plane go kind of in like self-destruct mode? Because like, what if you're over like enemy territory and you eject? We don't want them getting all our tech, right? It should go into like some kind of spiral dive or something. And maybe it does. I just don't know. But I thought that was, that was kind of odd. Landon, do you guys get into international stocks that much? Yeah, it's not something that tends to be awfully popular here on the show, so I don't normally talk about it, but we do have an international fund, which has actually killed the international index and doing much better. But usually people aren't asking those questions, so I don't know. I mean, if it's something that's interesting, I'm more than happy to talk about it. But other than that, yeah, we don't normally talk about it. Enphase, what about Enphase? You like Enphase? You hoping it bounces? You like those solar stocks? Valero is saying they're not going to do well. Is there any correlation between transportation of oil and big producers, for instance, Energy Transfer? They were saying today they're going to buy back their shares because there's no use for that capital. So the argument is we're putting that capital back in the shareholders' hands because it'll drive the price up, which is true. I just think it's sad that we live in that kind of a day, but that's what they've decided to do. And they got nothing else to do with the money. It will most definitely be a political talking point once those guys stop fighting about nonsense and get back to the things that we all want to hear about. Hey, Dustin, what are your opinions on Fed Day, Wednesday? This week? So I don't think there'll be any change at all. And I think if I had to guess and we were going to make a friendly bet, I think that they will not say that we're good to go for the rest of the year, but that will be implied that for the moment they're happy with the trajectory of inflation and all the other metrics while maintaining a strong job market or strong job market with low unemployment. But I'd be curious to see if by chance we move the needle, or in this case they call it a dot, into next year for rates coming down, right? Maybe coming down there. We will see. And, of course, we'll talk about it when all of that happens. Yeah. So we will see. I'm going to close this guy out here and wrap it up. I'm getting back to work, actually. Got more to do. It's a slow start to the week, but it's going to be an exciting week. So hold on to your britches. We'll be back to do all of this all over again. I thank you for watching, hanging out with us here, and congratulations again to Jeffrey W. for winning Guess the Dow. Nice.
When you wish upon a star, makes no difference who you are.